Rate cut reality check. Remember that credit card bill you've been stressing over, or that mortgage application you thought you couldn't swing? Well, the Bank of Canada just threw you a curveball. On June 5th, 2024, they slashed interest rates. This might sound like a win, but like most things in finance, it's complicated. Buckle up, because we're diving into the nitty-gritty of how this rate cut affects your wallet. The Bank of Canada doesn't mess around with interest rates lightly. They're the big dogs, the ones who set the tone for borrowing and lending across the country. When they cut rates, it's like a signal flare to every bank and lender. Time to loosen up the purse strings. But hold your horses, this isn't an open invitation to go on a spending spree. The domino effect. Think of the economy like a giant game of dominoes. The Bank of Canada just tipped the first one. Lower interest rates mean banks have cheaper access to money. They pass some of those savings onto you, the borrower. Suddenly, loans become more attractive. Maybe you can finally afford that home renovation or consolidate your debt. But here's the catch. Lower rates also mean you earn less interest on your savings. That high-yield savings account, it just got a haircut. This balancing act between borrowing and saving is where things get interesting. Mortgage mayhem and loan landmines. Let's talk mortgages, the big kahuna of personal finance. Lower rates could mean lower monthly payments for homeowners. If you're on a variable rate mortgage, you'll feel the impact immediately. Fixed rate folks, you've got time to strategize your next move. Refinancing might be on the table, but crunch the numbers carefully. And what about those credit card bills and lines of credit? Lower rates can make them seem less daunting. But don't be fooled. Debt is still debt, and it's easy to get caught in a spiral if you're not careful. This rate cut is a chance to tackle those balances head-on while the cost of borrowing is lower. Investment implications, a jolt or just a jiggle? Now let's talk investments. When interest rates drop, investors tend to look for higher returns elsewhere. This can give the stock market a boost, as companies find it cheaper to borrow and grow. But beware, the market is a fickle beast, easily spooked by uncertainty. This rate cut could make bonds less appealing, as their fixed returns become less attractive. It's a good time to reassess your investment strategy and make sure it aligns with your risk tolerance and financial goals. Remember, diversification is key. Stay ahead of the curve. Here's the bottom line. Stay vigilant. The financial landscape is constantly shifting, and this rate cut is just one piece of the puzzle. By staying informed and adapting your financial strategies accordingly, you can weather any storm and come out ahead. Remember, knowledge is your most valuable asset. Use it wisely. If you found this video helpful, please like and subscribe to Express Econ Geo Finance Insights for more updates.